Welcome back to Simple Mind Space, your guide to mastering your money and your mind. I'm your host, and today we're diving into a fascinating story from the world of cryptocurrency, Litecoin's upcoming halving event, and the enduring mystery of Satoshi Nakamoto, the elusive creator of Bitcoin. The world of cryptocurrency is constantly buzzing with anticipation. And for Litecoin enthusiasts, the next big event on the horizon is the halving. This event, scheduled to occur approximately every 4 years, cuts the rate at which new Litecoins are mined in half. So instead of the current rate of 12.5 Litecoins being awarded per block, it will drop to just 6.25 Litecoins. You might be wondering why this seemingly technical detail matters. Well, it's because halvings have historically played a significant role in driving the price of cryptocurrencies like Litecoin and Bitcoin. It all comes down to the fundamental economic principle of supply and demand. When the rate at which new coins are generated decreases, the supply also decreases. If demand remains constant or even increases, it creates upward pressure on the price. This is what happened with Bitcoin during its previous halvings, leading to significant price surges. Now, Litecoin's halving is generating excitement because of its potential to mirror Bitcoin's past performance. While there's no guarantee of price increases, the halving event certainly sets the stage for a potentially bullish scenario. But before we get too carried away with predictions, let's take a step back and understand why Litecoin even has a halving event in the first place. It's not just some random quirk of the system. It's a deliberate design choice built into the code of Litecoin, a design that was directly inspired by Bitcoin. Litecoin, often dubbed the silver to Bitcoin's gold, was created in 2011 by Charlie Lee, a former Google engineer. Lee envisioned Litecoin as a faster and more affordable alternative to Bitcoin, with a focus on everyday transactions. To achieve this, Lee drew heavily from Bitcoin's codebase, incorporating many of its key features, including the halving mechanism. This mechanism is a crucial part of Bitcoin's monetary policy, designed to control inflation and ensure a finite supply of coins. Remember, Bitcoin's maximum supply is capped at 21 million coins, and the halving events are a way to gradually approach this limit. This scarcity is seen as one of the core strengths of Bitcoin, making it a valuable store of value, similar to gold. Now, because Litecoin was essentially a fork of Bitcoin's code, it inherited the same halving schedule. Both cryptocurrencies share this built-in mechanism that ensures their supplies are controlled and their values are potentially protected from inflation over time. The upcoming Litecoin halving has reignited discussions about a common misconception related to Bitcoin halvings: the idea that the Bitcoin network will become less secure after a halving. This misconception stems from the notion that when mining rewards are cut in half, miners will abandon the network, making it vulnerable to attacks. But history tells a different story. While some less efficient miners might indeed drop off after a halving, the remaining miners often increase their computational power, ensuring the network's security. This is because the reduced supply of new coins can make mining the remaining ones even more profitable. Furthermore, the halving event often attracts new miners to the network, drawn by the potential for higher rewards. In essence, the halving can actually lead to a more robust and secure Bitcoin network. The upcoming Litecoin halving has also drawn attention to an infamous event in the cryptocurrency world: Charlie Lee's decision to sell all of his Litecoin holdings in December 2017. At the time, Litecoin's price was surging to all-time highs, and Lee's decision was met with a mixture of shock and skepticism. Many saw it as a sign of waning confidence in Litecoin, and some even accused him of cashing out at the expense of the community. However, Lee defended his decision, citing a conflict of interest between his personal holdings and his role as Litecoin's founder. He argued that owning a significant amount of Litecoin while publicly promoting it could be perceived as self-serving. Lee emphasized that he remained committed to Litecoin's development and saw his decision as a way to ensure its long-term success. He believed that by removing the potential for personal gain, he could focus solely on improving Litecoin as a technology and a payment system. Despite his explanations, Lee's decision cast a long shadow over Litecoin. The cryptocurrency's price plummeted in the following months, and it struggled to regain its former momentum. This incident highlights the complexities of leading a cryptocurrency project. While founders often hold significant amounts of their own coins, their actions can have a profound impact on the market and the community's perception. In hindsight, Lee's decision can be seen as a cautionary tale. It underscores the importance of transparency and clear communication in the cryptocurrency world, where trust and community are paramount. While Charlie Lee's decision to sell his Litecoin holdings made headlines, it pales in comparison to the enduring mystery surrounding the true identity of Satoshi Nakamoto, the enigmatic creator of Bitcoin. Nakamoto, whose real name, background, and even gender remain unknown, disappeared from the public eye in 2011, leaving behind a legacy that has revolutionized finance and technology. The mystery of Nakamoto's identity has fascinated the cryptocurrency world for over a decade. Countless theories have been proposed, ranging from lone wolf programmers to government agencies, but none have been definitively proven. Some believe Nakamoto's anonymity is a deliberate choice, designed to protect Bitcoin's decentralized nature. By remaining unknown, Nakamoto ensured that Bitcoin would not be tied to any single individual or entity, making it truly resistant to censorship and control. Others speculate that Nakamoto's disappearance was prompted by personal reasons, perhaps a fear of government scrutiny or even threats to their safety. The early days of Bitcoin were fraught with legal uncertainty, and Nakamoto's involvement could have posed a significant risk. Regardless of the reason, Nakamoto's absence has had a profound impact on Bitcoin's development. The cryptocurrency has evolved without its creator's guidance, relying on a decentralized community of developers and enthusiasts to maintain and improve the network. Nakamoto's final communication with the Bitcoin community was an email sent on April 26, 2011, to Gavin Andresen, a software developer who was actively involved in Bitcoin's early development. In this email, Nakamoto expressed a desire to move on to other projects and suggested that Andresen take over the reins of Bitcoin's development. Nakamoto also shared the alert key and broadcast code, crucial components for maintaining the Bitcoin network, with Andresen ensuring the network's continued operation. Nakamoto's final email provides a glimpse into their mindset at the time of their departure. It suggests a sense of completion and a belief that Bitcoin was ready to stand on its own, guided by a decentralized community rather than a single leader. Satoshi Nakamoto's true identity may forever remain a mystery, but their legacy continues to shape the world of cryptocurrency. The decentralized and leaderless nature of Bitcoin, a direct result of Nakamoto's deliberate choices, has proven to be one of its greatest strengths. It has allowed Bitcoin to flourish despite countless challenges and become a global phenomenon, inspiring a wave of innovation and challenging traditional financial systems. As you can see, the world of cryptocurrency is full of fascinating stories and unexpected twists. Litecoin's halving and the mystery of Satoshi Nakamoto are just two examples of the exciting developments that continue to shape this rapidly evolving space. Whether you're a seasoned cryptocurrency investor or just starting to explore this fascinating world, remember to stay informed, be skeptical of hype, and focus on the long-term potential of blockchain technology. If you enjoyed this episode, please hit the like button and subscribe to our channel for more insights and inspiration on mastering your money and your mind. Share this episode with your friends and family who are curious about cryptocurrency. And don't forget to leave a comment below and let us know your thoughts on Litecoin's halving or the mystery of Satoshi Nakamoto. Thanks for listening, and we'll see you in the next episode of Simple Mind Space.